The broadcast is now starting. All attendees are in listen-only mode.
To be part of it. All right. You have a chat window, guys. If you have any questions during the webinar, you're more than welcome to ask me. Okay, guys. Everybody's here? Okay. You have a chat window, okay? Don't forget, like we did last time, if you have any questions, okay, just write me down. So we could talk about it, okay? Of course, I'm going to leave some time for questions and answers at the end of the webinar. All right. Anyone has any technical problem? Can you hear my voice? See the screen? Okay, guys, we've been having some technical problems here. Okay, just a minute. Let me try to fix it out. All right. Okay, then. Can you guys hear me now? Just write on the chat window. Okay, that's great. Okay, then, everyone. Okay. So I'll start from the beginning. Okay, welcome to the weekly webinar. Okay, as I said a minute ago, my name is Neil Green, and we've been doing this webinar every Wednesday, twice a day. The first one takes place at 8 a.m. GMT time, and the second takes place at 4 p.m. GMT time, since we have customers all over the world. And we want to reach all of you and give you the information in order for you to take the right trades and make some money, because this is what we're here for, right? Let's start, okay? I would like to thank you. First of all, I would like to welcome you guys on our Facebook page, okay, joining us for the first time. You're more than welcome to go to our website, okay, which is fm-fx.com. All right, and open an account with us and trade with us. I'm doing, of course, we're gonna assign you an account manager. I've been doing these webinars for free every week, twice a day, as I said, in order to give you all the relevant information for you to take the right trades and talking about events of the same week. So let's start. Today we're gonna talk about CPI and Janet Yellen. All right. Okay. Oh, just a second. Let me restart it. There we go. Okay. CPI and Yellen. Okay. CPI actually is the consumer price index. All right. Was published actually. I made it in the morning at 1:30 GMT time. Okay. And actually gives us CPI covers the change in the price of basket of goods, right? How expensive it is for the US customers to buy, you know, whatever they want to buy, and it is the best indicator for inflation. Of course, if everything is more expensive, it means that inflation goes up. Actually, by the way, inflation in the United States right now sets as 2%, which was the goal of Janet Yellen and the U.S. government. So they reached their goal. The situation in the United States is great right now, but we have to balance it. We don't want inflation to go too high because then everything will be too expensive, right? You understand? So the expected CPI number was 0.3% and the core CPI was 0.2%. Core CPI mostly excludes the change in the price of oil. All right, where can you find it? You can go to one of the websites, Forex Factory, investing.com, or any other website that gives us the information about the market at the same day. Okay, today, as you can see, everything was green. All right, CPI expected was 0.3%. Actually, it was double more than that. It was on 0.6%. The core CPI expected 0.2. It was 0.3, and all the numbers at the same time at 1:30 GMT time today was higher than expected. All right, very supportive to the US dollar. Let me show you the reaction. Let's go to this is the dollar versus the Japanese yen, for example. Put it on 30 minutes. This is where the CPI was published. You see this huge, represent 30 minutes, huge green candle. It means the US dollar got really, really stronger, okay? And it's actually part of the trend. If we look at it daily since the elections on November 9th, all right, when Donald Trump we talked about it on past webinars, he talked about tax cuts and government spending, and price of dollar, just like the whole US market, went up. So see, it went up, and right now after the CPI result, it's still going up. All right, just to give you a wider look on the US economy, Dow Jones, that represents the 30 companies with the highest value in the market, highest point ever. Look at the monthly chart. Each candle here represents 1 month. You see it's the highest point ever. Right now, it's never been so high. S&P 500, same thing. NASDAQ, everybody heard about the NASDAQ that represents the 100 companies with the highest value in the market at the highest point. And so the US market right now is booming, and usually it goes against the dollar. But what happened is interest rate went up on past December and the one before from 0.5% to 0.75%. We're going to talk about it in just a second. So let's go back to the PowerPoint, and because I can talk about the market all day. So let's be focused on the CPI. Now, the Federal Reserve uses two indicators in order to decide about rates. Okay? Of course, if interest rate goes up, people would prefer to put the money on non-risk in the bank and get better percentage. Okay, if interest rate goes down, okay, it means I won't get so much money from the bank, and I would take my money and buy stocks, so the US market goes up. Now, the first indicator is the job report. All right, I've been doing these webinars, I think, for years, and once a month I'm talking about the NFP, the non-farm payroll, unemployment rate, salaries, and so on and so on, every first Friday of the month. Okay, at the same time, at 1:30 p.m. GMT time, we have the jobs report. Now, the jobs report gives us the mirror to what's going on in the US economy, which is the strongest economy in the world, and we can trade according to this, because this is one of the two indicators that affects the interest rate mainly, okay, and strongly. Now, the second one is the inflation report that has to do directly with the CPI that we just saw today. Okay, higher inflation supports higher interest rates, of course. Okay, if inflation goes up, we would like interest rate to go up as well in order to balance it, so prices are not going to be too high. Rate decisions by the Fed have proven to have a huge influence on the market and the US dollar. Let's take an example. Let's go back to the US dollar versus the Japanese yen, or whatever you want to trade on, one of the majors. Let's put it on daily. Okay, and let's take a look on December 14th. Right here, you see this huge green candle? Let me zoom in for you. December 14th. This candle, this is interest rate going up from 0.5% to 0.75%. Now, the price of the dollar didn't go up just because of the interest rate went up by 0.25%. Because it was expected already, so the market priced itself. I think the major reason for that was that we expected Janet Yellen on the following press conference 30 minutes after the interest rate decision to talk about and say that we expect 2 hikes in 2017 of the interest rate. Just to remind you, we had 2 hikes of the interest rate in the past 7 years since the big crisis in 2008. The first one took place on December 16th of 2015 from 0.25% to 0.5%. And the second one took place just 2 months ago on December 14th, as you can see here, from 0.5% to 0.75%. And the US dollar kept going up, and it didn't really, maybe it affected the US market, stock market for 1 day, but the US stock market, as you saw, still climbing up. Okay, showing you, let's go to the Dow Jones, for example. Interest rate went up, the dollar got stronger. This is December 14th, right here. You see, after a lot of green days, 1 day the stock went down, but then it stopped the uptrend, and now it's still coming up because of Trump's policy. Okay, great, guys. You're great students. Okay, let's go on. All right. Now, a higher CPI number today support a hike in interest rate on March 15th. Just to remind you, we have 8 interest rate decisions here. 4 of them are followed with a press conference 30 minutes after the interest rate decision. Why is it important? Because in the past 2 times that interest rate went up, it was followed by a press conference of Janet Yellen, the head of the Fed. Now, why is that? Because it gives Yellen an opportunity to explain the moves of the Fed after the interest rate decision. Okay, assets to trade, of course, will be the US dollar versus all majors, or you can trade on gold as well. Just to remind you, gold works with an opposite correlation with the US dollar, which means gold actually is the parking lot of all currencies, mainly the US dollar. When the US dollar is getting stronger, gold is going down, and the opposite. Of course, you have the opportunity to make money both ways, because if I believe that interest rate will go up, if I have a good CPI, I can go with the dollar and against gold, buy dollar, sell gold, and the opposite. Traders should take into consideration the testimony by Janet Yellen that just started about an hour ago, less. And head of the Federal, Janet Yellen, testified it already at 3 o'clock GMT time. Market participants will look for more information on interest rate, and you can check on the news. If Yellen hits, okay, that rates will raise fast, the US dollar could receive, of course, support. Another issue that could be addressed is the Dodd-Frank Act. Now, I want you to pay attention to this because we want to look at the expectations for interest rate on March 15th, following the good CPI. But President Donald Trump said he wants to remove regulation on banks. Okay, he called the Dodd-Frank Act. Bank stocks have pushed higher in the past 10 days on deregulation expectations, as Trump said. Bank stocks could be pressed lower if Yellen cools down expectations for deregulation. Looking at the US banks, let's take a look at the stocks. Look at Citibank, daily chart, booming up in the last 10 days, all right? Let's take a look at Goldman Sachs. Same thing, because of the deregulation that we expect, I think is the highest point ever. See? They're doing really great. Not because of interest rate is higher, means banks are giving out loans and making more money. So I want to buy bank stocks. The other reason is the deregulation that is expected to be after we have regulations on banks since 2008 with the big crisis. They just give out loans without even checking the customers. JP Morgan, same thing, and so on, same correlation. See, the market is pretty easy if you know how to look at it. Now, assets to trade, of course, during the testimony, which is right now, okay, US dollar versus all majors. Pay attention if the US dollar is the major or the secondary currency, so if you know whether to buy or sell. US banks such as JP Morgan, Bank of America, Citi, and the rest. Traders should prepare their accounts just like every time, as I told you on past webinars before the events, with support and resistance levels per asset, which means if I want to trade on the euro versus the dollar, when it goes down, of course, it means that the dollar is getting stronger because the euro is the major one. If I take it on a 30-minute chart, I can find right here a resistance line and a support line. So set the lines before the trades and see how high or how low the price can get. And if you know, okay, and ask your account managers about it, or you know, you can join our webinars. But if you know how to combine the technical analysis with the fundamental analysis, guys, you're professional traders. Of course, Good luck. I hope you're not going to need luck, okay? If you listen to the webinars and your account managers, you're not going to need luck. Guys, you from Facebook, if you don't have an account yet, this is the time to join us, okay? Just go to fmfx.com and open an account with us, and let's make money together, right? Let us help you to read the market correctly, okay? To give you the right information, and I think that's it. Okay. If you have any questions during the week, more than welcome to email me. I'm trying to answer all the emails, but you know, it's pretty hard when you get thousands of them, but I'll do the best I can. And I would like to thank you for the thank you emails that you sent me in the past week. You know, cash is good, so I'm very happy for you guys. Hope you bought a new boat or a new car or whatever you needed. You know, pay tuition, college, and so on, and your mortgage. I get a lot of emails like that. So I'm happy for you guys, and trade smart, trade big, and thank you very much for participating. Have a great one. All right.